Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Sunday, February the 27th. The year's 2022. Let's talk trading. It's time for the weekly open and gap. These videos are for educational purposes only. Your results may differ from mine. Taking a peek at the monthly chart, you can see we're still red on the month. And today technically is the last trading day, even though it's Sunday here. Technically, it's Monday on the charts. The weekly candle, we had a huge gap down. I was thinking about jumping in, but I decided not to. And there's plenty of gaps to be filled, including the one on the pound, 101 pip gap. That's why I was just so tempted to jump in. You can see it's already 55 pips off the bottom. It's made up more than half of that distance. Not to mention it also went through the launch pad in the 40s. That was another reason. But normally I just don't trade on Sunday nights. So usually I just don't trade. So I figured I'd just wait and see what happens. But definitely a missed opportunity. We are 161 pips below the weekly open. And as you can see, we opened way outside of that inside bar on Friday, and we went back up into it. Now we're just 1.7 pips below it. Lots of inside bar action on the daily, and looks like there's some to be had on the weekly and the monthly. But remember, this is the last day of the month, so I wouldn't be looking for many monthly inside bar breaks, but anything can happen. As you can see, there's the high, there's the low, the month. I guess there's a lot of action here. Normally, this time of day, we don't have any pairs over 100 pips, but we've got, let's see, we've got 10 pairs over 100. That might have to do with what's going on over in the Ukraine. Just some craziness. Buy zone triggered a buy from the get and hasn't looked back. Actually, and it's funny, the rat zone is large enough, but since we still have that gap that needs to be filled, I don't know if I'd be so gung-ho on taking a short just quite yet. Not to mention, there's also a pivot or two that needs to be filled. Speaking of pivots, we've got that pivot at 134.05, 41 pips away. We're right there at yesterday's low. Well, right there. Oh, let's see. Near pivot point bias is short. I would buy that. Near S1 bias is long. Well, we opened between S2 and S3, so let's see what happens. So there's that daily pivot point that we missed. Weekly at 134.40 we've missed, and the monthly we've already taken out. We went in and out of the lower wick zone, that daily lower wick zone from the previous day. We just popped in it and just fell back out of it. So let's see if we get a break, a clean break at 131.71, and it might head north and fill that gap. And the range so far, 71 pips, like I said. Normally we don't see a range that high. And considering the range of the daily on Friday was 72 pips, we're just 1 pip away. So it's a lot of movement to be had. And my guess would be, and it could be wrong, but it looks like we should probably have an inside bar. But we'll just have to wait and see what happens. That's all we can do as traders. And on the subject of waiting, I read something today that had nothing to do with trading, but has a lot to do with trading. It wasn't, the subject wasn't trading, it was more about things in life. And it was talking about patience and how there's active patience versus passive patience. And the difference is active patience is you're doing things on a regular recurring basis that are going to benefit you in the long term. So for example, if you start exercising today, you're not going to see results tomorrow. You might not even see results in a week or two. It might take a month or two before you actually start seeing results. In fact, oh man, this was a while ago. I'd say back in the early 2000s, there was uh, somebody took a picture of me on the beach and I had my shirt off. And I've been working out. I mean, hitting it every day, lifting weights, jumping rope, aerobics, push-ups, hitting the solar flex, riding my bike. I mean, I was, feeling good in good shape. And they took this picture, and I looked at that picture, it's like, holy cow. So, that's the thing. And what does that have to do with trading? Well, the act of patience is doing those little things that you need to do, like making sure you nail the entries, making sure you have your stop loss risk management in place, and you execute it diligently. And maybe you take those 2 pip or 3 pip gains as opposed to letting the market come back and hit your stop loss. Walmart and I've talked about that many times on these videos, and trading the Walmart method and any method for that matter. But see, if you make those little gains on a daily basis and then it just compounds, it ramps up, next thing you know, you've doubled your account. You've tripled your account. You've quadrupled your account. Now, it might take a year or two, but if you do that steadily, that's going to just grow and grow and grow. And with foreign exchange, it's easy to do, but it will be the hardest thing to do because there's so many times, all it takes is just one slip, one miss, and you could, set yourself back to square one or square -1. So you just have to be patient and do those things that you need to do on a regular recurring basis. And as I mentioned, it's not that easy, but it's one of the easiest things you'll ever do. So here we're looking, just mentioned the Walmart. You can see here there was a short trigger at 60 that didn't pan out. But then again, as I said, this is not the hour to trade the Walmart method. You can see here, these ranges are relatively small. Usually during the hours we trade, it's over 20 pips most of the time. Higher low, lower high method with some of the 3-level ZZ semaphores, putting in the highs and lows, support resistance type lines. You can see we're putting in a 3-ball here on the M5. We're above that highest low. See, it came down, almost broke it, bounced. Whereas on the 3-ball, just a couple hours ago or so, It cleared that lower high and hasn't looked back. And you can see this is a relatively clean chart. And once again, you just trade with the candle color at the line. So if it puts in a 3 ball, then you're only looking for longs. Until it puts in a 3 ball, then you're only looking for shorts. I mean, I wrote the indicator, it even tells you right here. Or I modified the indicator, I should say, extensively modified. I don't know if I've got more code than the original code in there, but there's a lot of code in there. I really went to town on that indicator. And then, as I mentioned before, trading with no indicators. Just looking at price and seeing this, when I saw that big hole, I was just so tempted just to throw a long trade in, but discipline said, no, that's not how you trade. You've got other things to do. You're not going to be in front of the computer. So even though I just wanted to throw on, a one lot or one mini lot trade just to see what happens, that by not doing that, I exercised discipline by sticking with my plan. Harry hindsight, yeah, I should have, but no, you have to, if you want to be in this game for a long time, you have to stick with your plan, especially if you know your plan pays off. But here, all we have is just this horizontal line at the current price. And you can see here, it's possible that this support might become resistance. As you can see, it's been a lot of oscillation around that line. Just have to wait and see how price reacts. Because that's all we can do as traders, see how price reacts. And once we see it, we label it accordingly, and then we trade accordingly. So if you see price going up, there's no reason to go short, right? And when you look at, this type of chart in the 1 minute, you can see just all the oscillations. But I mean, if you go up to say H4, tells a kind of in a way, it almost tells a different story, but not really. But you can see a lot more data, and you can see what price has done in this area. It's gone up from there, come down the here, gone up, come down and through, come up. So what do you think price is going to do? You think it's going to come down to here, or do you think it might continue up? And so when you look at a chart like this H4 chart, you're looking at a lot of price action, since June. That's 6 months. Actually, it's from the end of May. Let's just call it June through February. That's 8 months of data you're looking at right now. So when you look at this chart, when it's making a 10 pip move, it hardly moves anything. And so when you trade on these charts, somebody said, I read that they call it's like watching it in slow motion. So maybe if you can't make those minute to minute trades because things are moving too quickly for you, you could slow the chart down, maybe at H4, daily, weekly, monthly. And if you look at the monthly chart, you can see, well, maybe price is really going down. You'll have to figure it out because, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out. I hope you had a fun, safe weekend and a profitable week next week or this week.